COVID-19 pandemic has had a significant impact on foreign direct investment in Africa. Investment flows to the continent declined by 16% in 2020 to $40 billion from $47 billion back in 2019. Economic and health challenges due to the pandemic combined with low prices of energy commodities weighed heavily on foreign investment to the continent, according to the UNCTAD, United Nations, of course, body on trade. And the Central Bank of Nigeria is boosting supply of maize to the market. CBN is opening the taps and the maize reserves and adding 50,000 metric tons of maize supply in order to boost prices and combat middlemen who have been hoarding maize in order to, boost prices in their favor. Joining us now, Damilare Asimiyu, who is an analyst with Afrinvest Securities Limited, is here to discuss further. Damilare, thank you so much for joining us. Good morning to you.
Yeah, good morning, Reuters.
Well, starting with the CBN and the maize, the increase in supply of maize, what do you make of what the CBN is doing?
Yeah, for me, I think the CBN is just doing the needful because around 2019, CBN, created a list of some items that was banned from accessing FX for importation, and maize is one of these. And prior to that time, Nigeria maize need is about 15 million metric tons, and we produce around 8.6 at that time. Though we touched, 10.6 then, though we touched 10.9 in 2019. So that means we have about 4 million metric tons shortfall. So since the CBN is preventing, producers who need this commodity from accessing FX through the CBN windows, CBN won't be doing any better for the economy by not, rather than doing things like that, because that decision alone, drove food inflation. In the last 20 months now, the major driver of Nigerian food inflation, Nigerian headline inflation has been the food inflation, which accounted for about 63% of the CPI index. And when you look at maize, if you look at it in terms of direct consumption, about 60% Nigerian household, depends on maize or maize-related food. And when you also look at it from the industrial perspective, we have a number of industrial giants who need this for the production of your commodity. So if the CBN does not want to stifle those people, because once these people cannot get dollar at a decent rate and they have to go through the parallel market to get dollar, it then means that they will buy maize at an expensive cost, and they will surely transmit this to the final consumer. And this will surely transmit to higher inflation. So in order to consolidate the recent 2-month gain in terms of the decline in inflation, we've just had 2-month decline after reaching an all-time high of about 18.7. The CBN can't do anything better now than to allow for this. Thank God we have the Anchor Borrower program that the CBN is funding, and they have significant, maize stocked up. So releasing that quantity, about 500 or so, to producers, in the agri-value chain, those that need maize, it's a welcome development, and I think it will help stem inflation as well as contain middlemen who deliberately hoard this commodity to drive up prices.
Fantastic. Thank you for that. I want to move on to foreign direct investment and this UNCTAD report that we took a look at. Looking at the drop, when we had that up earlier, we'll put that up again for our viewers. But looking at the drop in foreign direct investment, how long do you think it will take the continent to recover to get back to those prior numbers?
Well, I think we should start by saying what has been the trend before 2020. In the 3 years that led to 2020, foreign direct investment to Africa has actually been growing at an average of about 11%. Okay. Yeah, 2020 was a pandemic year, and when a pandemic struck and it affects any economy, the first thing that investors will consider is what is the effect of this on the economy and what is the risk level. Now, Africa is an economy in which most of the biggest economy there are commodity-dependent economy. And with the pandemic affecting our economic activities, our fundamentals weaken and risk heighten. And I'll use Nigeria, South Africa as an example. Prior to 2020, Nigeria and South Africa happens to be the biggest economies in Africa, but that has changed now because Egypt has, pushed South Africa to the top position, because South Africa economy contracted about 7% last year.
Yes.
Nigeria did about 1.9. So investors have factored in the fact that with this pandemic that even advanced countries are struggling to deal with, how will African countries be able to do it? And one of the things that happened immediately the pandemic struck is the fact that exchange rates across Sub-Saharan Africa, or let me say Africa as a whole, began to fall. At least Nigeria exchange rate fall about 22.9% last year. We started the year with 306 to $1. That's the official rate. And we closed at 379. So that's like a 22.9% drop. And also in South Africa, the exchange rate also fell about 5%. So those are the factors that investors will look at and want to be cautious. Plus the fact that they will look at the capacity of the government to contain the pandemic. As of yesterday, there was a report released by the World Bank, and it's titled Sub-Saharan Africa, we need to act now. And what drove that report is the fact that their data shows that while we are in advanced country, we're having about 70-80% vaccination rate. In emerging market, we're having almost 40%. In Africa, especially Sub-Saharan Africa, we have less than 5%. And if you use Nigeria as a proxy of Sub-Saharan Africa, it's very shocking that currently Nigeria has just barely 1% of its population have been vaccinated. I mean, the first round, while those have taken the two is like 0.5. And Nigeria happens to be the biggest economy in Africa in terms of GDP and even population size. And now we now have a Delta variant of the virus, which is even more deadly than the previous one. And I remember about 2 weeks ago, so the Lagos State Commissioner for Health says that the state should be prepared for, a possible third wave. So, and if anything happens to Lagos, it's like you're shutting down the economy of Nigeria. So, the inability of our government to provide enough money or to fund vaccination, is a major risk that investors will always consider, in bringing it. And foreign direct investment is something huge. If you don't get it right with the fundamental of the economy you are taking your money to as an investor, as a foreign investor, you can actually lose it all. And that's why investors are weighing all these risks, currency risk, exchange rate risk, inflation risk, as well as ability to manage the pandemic, because health is important, because your business depends on the healthy living of the people. Whichever business you're setting up, be it an hotel business, be it manufacturing, you need people who are healthy, people who are alive to patronize you, to make your business go forward.
Fantastic. You've placed a lot of emphasis on health. I think we had this earlier, looking at the regional FDI figures for North, South, East, and West Africa, all down in 2020. How do you see the competition between each of these regions playing out for these FDI funds? You mentioned Egypt knocking off South Africa off the top spot. How do you think the regional competition is going to look like and play out?
Well, first, I would say that in 2020, we actually have one region that outperformed the others. That's Central Africa.
Right.
Our FDI to Central Africa grew about 19%, and that was mainly driven by increase of flow to Congo. And now, so what makes Congo, Republic of Congo case to be different last year is that economy mainly depends on precious metal. And if you recall, last year was a boom year for precious metal. Talk about gold. Gold rose from about less than $1,005 per ounce to almost $2,000. So that's, and most of the foreign investment that flew into to that country was just to, drive that industry. However, looking at other regions, the north, there was a reduction there. Egypt happens to be the biggest destination of FDI in Africa. In fact, accounting for about 60% of whatever flows to North Africa. They got about 5.9 last year out of the 10 that went there. But if we now look at, with the pandemic and what has happened, so what's the outlook looking like? I think what will determine it is, one, how is the macroeconomic indicators able to recover on time, as well as the state of infrastructure in those countries, as well as the extent to which they can, they are able to vaccine their population, because this pandemic is a major risk that every business will consider. And, Egypt last year, despite the fact that their economy grew, because Egypt is one of the few countries in Africa that had an increase in GDP, despite that growth, investors were still cautious, and their FDI declined, from about 8 in the previous year to 5.9. So it means that what would determine FDI flows into Africa going forward is the pace of recovery in macroeconomic fundamentals, as well as the extent to which they are able to vaccinate their population, because it's a major risk that investors not want to toy with.
Fantastic. I want to take you to, since we're talking FDI, Vice President Osibanjo saying that Nigeria has the capacity to tax global tech firms that have a local presence here. What do you make of his comments as he was entertaining members of the Chartered Institute of Taxation and so on?
The truth is this: every sovereign country has power, to decide the laws that works for them. So it now depends on the multinational or the foreign companies that wants to come there to decide whether to go to this country or not, if the law is palatable to them. In the context of Nigeria, the fact needs to be said, Nigeria ranks among the lowest tax to GDP country in the world. As a matter of fact, a report released by the World Bank last week titled Resilience Through Reform indicated that Nigerian tax to GDP last year was about 4%. That is far below African peers' average of 15%.
Right.
And if you look at what the Vice President said, taxing multinational, that's actually not really increasing tax in the real sense. It's just expanding the base. And it's one of the things that we have been clamoring for. Don't increase tax, because if you increase tax, you will make life unbearable for a lot of average Nigerians. But increase the tax base. Because let's do this illustration. Currently, Nigeria has about 104 million internet users. And let's now assume that each of these internet users spend at least 1,000 a year. 1,000 comes from each of these internet users to this foreign tech giant. That means there will be 104 billion, right, as revenue for those people. This is just an assumption.
Yes.
Now, if the federal government is taking 10% from that, that's about 10.4 billion tax.
Right.
So if this is added to what we have as tax, I mean, it will help our revenue. Last year, Nigerian government retained revenue set to about 3.9 trillion, whereas our budget was 10.1 trillion. That's a huge gap. So there's a gap about a revenue shortfall about 6.1, and not to talk of even loans that need to be funded. So one of the ways that the government, even the World Bank recommend that the federal government should increase tax, I mean, not just increase tax, but expand it. They even recommend that they should increase tax on tobacco and alcohol because they believe that we can get more from that. So I think this initiative is not really in wrong direction, because if you look at it from the perspective that most of these tech giants make good money from Nigeria. I mean, they don't play with Nigeria because of the population and because of the level of patronage of their platform by Nigerians.
Fantastic. About a minute to go, I want to quickly get your take on, since we're talking tech, the GG acquisition of Cars 45, and I guess that whole classified space. So what do you make of what's happening there? Well,
I think that will help strengthen the e-commerce platform in Nigeria. Although these two GG and Cars 45 actually operate different business model. Cars 45 is transactional before. GG is classified. So over the years, GG has come to realize that aside for real estate that has the highest listing on their platform, the second highest is car. People buying cars and selling cars, and they make less on this because until you advertise up to 5 products or more, they cannot take anything from you. You register for free until you're doing 5 or more. But again, Cars 45 have been struggling. In the last 3 years, Cars 45 ownership has changed that like 3 times. In 2017, a German-based company, took charge. In 2019, again, OLS, bought from Frontier Car Group, which is that German company I was talking about. And again, last year, OLS took charge of everything regarding GCF. So it's a good thing. It's going to bring about synergy. GG has the market. Cars 45 have the infrastructure because they have a lot of inspection centers across the country. So it's just bringing things together and maximizing the potential.
Damilare Asimiyu, Analyst with Afrinvest Securities Limited. Thank you so much for joining us.